Stick around to the end of the video because I'm going to give you one stock that I'm also thinking about buying into in addition to the ones that I just bought into last week that I think is going to do really well. It's nice and cheap. So if you're a beginner investor, I know you're going to love this one. Please stick around. You're going to love it. What's up, everybody? Welcome to Own the Chaos. The stock market is crazy and chaotic, and we've made it our mission to help you own it. So if you want to learn more about becoming financially free and having some fun investing in the stock market, make sure you're hitting that subscribe button and hit that like too if you get value out of today's video. All right, so just a week ago from today, I explained to you guys about how I was down in my account and that I wasn't deviating from my plan and gave you 3 rules to stick by. And I'll put the link up here that, if you're down on the year, what you should be doing to your account in order to make sure that you're set up for the rest of the year. And so what I ended up doing was just that. I went into some stocks that I felt really comfortable with, my highest conviction stocks. I got out of a lot of the speculative stuff and then was thinking and considering about moving into some more reopening plays. And well, this past week, it gave me an incredible opportunity to be able to do just that. The NASDAQ, the tech stocks went absolutely nuts over the last couple of trading days. And so then I ended up starting to think to myself, how long can this actually last? In my opinion, I think that we actually see interest rates rise to maybe about 2 to 2.25%, which means that we still have quite a ways to go, considering that right now we're sitting around 1.6, 1.7 as far as the 10-year treasury yield is concerned. So if I actually truly believe that, and I do, then what decisions should I be making if I'm given an opportunity to trim out of some of my tech plays? So if I think that interest rates are going up, that means that it's going to impact tech significantly. Tech is so sensitive to interest rates rising, especially when it comes to the bond yields, that you have to really be aware of that and make decisions accordingly. Looking at things like value stocks and banks, and yes, even some of the reopening plays is going to make a lot of sense. Not to say that you should be abandoning tech whatsoever, but definitely if you feel like you are overexposed to technology in general, then maybe you should make some decisions as far as that's concerned. And so this week, it really gave me an opportunity to sell out of my Square position. And I know a lot of you guys might be a little surprised by this or have a few eyebrow raises, but in order to continue to balance this account out and look for plays that I think are truly going to move to the last 3 quarters of the year, then I need to make that decision. I need to make it soon. Now, this doesn't mean that I don't believe in Square. This just means that I'm still trying to find balance within my portfolio and go after these plays that I think still have tons of upside leading to the last 3 quarters of the year. So when I started to think about reopening plays, obviously travel's in there, and you guys know how bullish I am on Airbnb, so I think I really have myself covered there. But when I started to think about other reopening plays that make sense, I started to look towards sports. And we already have a huge position here in Penn National, but I was thinking about along the lines more of like the discretionary type stocks. And then that's when I got to thinking about Under Armour. When you have kids that are playing more sports, when you yourself might be getting into more athleisure type stuff, we've talked about how Peloton is definitely here to stay, but if you're going to do more outdoor activities, especially as it relates to sports, then maybe Under Armour could be a good play here. We saw that Nike actually ended up getting beaten down some, and Under Armour has really started to make some great strides, especially during this pandemic, to take really good opportunities to restructure their budget and really get back on track, and they look like they are poised to at least see $25 a share. They are really set up to have a really great year, especially as more and more kids get into sports and more consumers want to spend money on their kids. You want to wear more tennis shoes. You need a brand new pair of tennis shoes. You're not wearing sweats anymore at home. You're going to want to go to something like an Under Armour to be able to buy more and consume more goods. And when I saw Lululemon's earnings come out just last week, their outlook was absolutely insane, especially when it comes to their consumer goods side of the business. Lululemon is huge in the athleisure sector and the industry itself, and I think that this bodes well not just for Lululemon, but everything across the board. So that is why I decided to get into Under Armour. It's nice and cheap. I could get a bunch of shares. We could ride this up to maybe 25, who knows, perhaps even $30 a share, depending on how much people are willing to buy, and I think this is a really good setup here. If we look at the chart, it's actually started to come down as tech was going up last week. So this is where I took my opportunity to get into some Under Armour with an average share price of around $18.36 per share. I do plan on getting more. Currently, I have 350 shares, and I've been starting to work my way into position just last week. I think that this is going to be something that is a really good opportunity if we do end up coming down and retesting the 50-day MA line. So if this comes back down to $18 flat, I think that I could see an opportunity there to average down, but I won't discount the fact that I could average up on this as well. Maybe looking at this at 1866, which seems to be a recent resistance, and I could really see myself adding there as well, because if it breaks up over that, I think that we could start to see a move back up over $20 a share. And I think once we get up over 20 again, this is going to be a really nice mover. I think $25 a share still very much in play here for Under Armour. Now, following along the lines of discretionary stocks, I think that commercial real estate has gotten beaten down enough to where it makes some sense to start working your way into some of these. Now, they shouldn't all be treated the same, and that's why I got into Simon Property Group. If you're not familiar with Simon Property Group, or ticker symbol SPG, this is a company that invests in property surrounded primarily around malls and stuff like that. And I know that you might be asking yourself, well, aren't the malls dead? And in certain cases, yes. But Simon Property Group is one of those companies that has taken the mall and turned it into something that people really love and enjoy. And in my opinion, I think what they've done with some of the mall structures, they've bulldozed them over, and they've built up these nice standalone stores that, you know, provide that outdoor atmosphere. Doesn't quite feel like a mall anymore. And so in my opinion, if we have people going out, they want to do in-person shopping, then I think that SPG stands to be a really great opportunity here. Looking at the chart again, I think this is a really good setup. Did I get in at the absolute bottom? Absolutely not. But I'm taking advantage of the dip here. And as this came down along with Under Armour and some of the other cyclicals last week, as tech made its nice move, I ended up grabbing this at $115 average. I ended up buying a couple of shares at a time, working my way to 20 shares. I would love to have somewhere around 40 to 50 shares of SPG before feeling comfortable about a full-size position. So I will take some opportunities if this does end up dipping down back to the 50-day moving average to perhaps average down on this if the opportunity presents itself. If it doesn't and it just wants to keep running without me, that's fine. I at least have some shares in my back pocket, so where if this does end up taking off, I think we're in some pretty good shape. If we look at this from a long-term standpoint, SPG still has a lot of upside. We can see that pre-pandemic, this was sitting up to $147 a share. So I think there's a lot of upside here still left to go. And so I wanted to take some opportunities and sell some of the tech after its nice little run and work my way, rotate my way into some of these stocks. Now, I know that some of you might be down as far as me wanting to sell Square. And again, trust me, I would love to be able to own Square again. And I'm sure that if it does end up coming back down, that I will be scooping up some more when the opportunity arises. But I want to make sure that I got myself into some more reopening plays, because I think in the short term, this is going to be the play, and probably through the end of the year, honestly. I think that those are going to be the ones that a lot of investors are going to have their eyes on. The discretionary stocks, the industrials, banks, all that kind of stuff is going to be stuff that people flock to, and it's not going to be so much tech, especially if we start to see more interest rates rise as far as the 10-year bond is concerned, and also scares of inflation. Tech is very sensitive to that sort of thing, whereas some of these industrials and value stocks are not. So as promised, I'm going to share with you a stock that I'm also thinking about getting into, and that is going to be ticker symbol EAF. GrafTech International is a material stock. And again, this falls along those lines of a great reopening. When we're looking at, infrastructure bills and that sort of thing, I think that something like EAF is going to be a really nice mover. And it already has started to move, but the upside here, I think, is still very much extraordinary. It's crazy to think that these stocks were very unsexy at one point, and now all of a sudden they're coming back into the spotlight. Graphite can go into so many things as far as materials concerned, and they also play a role in EV batteries. So I think this is going to be a really good play. They have a nice dividend as well. So in my opinion, I think the upside here is really, really good. I think we could at least get this thing up to around $15 a share or more. Probably going to be, I'm going to err on the side of the bullish side here. And I think that this actually does end up going higher than 15. So going to work my way into this. If this dips back down towards the 50 MA, around $11.50, $12 a share. And I like this particular play. So if the setup is good enough for me on EAF, then I think this one's going to be a good one to grab. So let me know in the comments below. Do you agree with the decisions that I've made? Do you disagree? Do you think I'm crazy for selling Square? Or do you think that there are going to be opportunities to get back into Square later? Or do you think that I should have just dumped everything back into tech because it's going to come roaring back? I want to hear from you guys, so let me know in the comments. Also, if you're visiting for the first time, I certainly would appreciate a subscription if you want to see more content like this. And if you got value out of today's video, you know what to do. Hit that thumbs up. Certainly would appreciate that as well. Guys, thanks so much for tuning in. As always, I will see you all before the bell. And B. Smith is out. Bye.